Hi, I'm Hannah Wallace and welcome to Finextra TV. With me in the studio today to discuss the SEPA instant mandate is Ainsley Ward, Vice President at CGI and Global Business Lead for CGI's Payment Solutions. Ainsley, it's great to see you again. Thanks for joining us.
It's great to be here again.
Really good to have you in the studio and talking about a very interesting and indeed pressing topic, what market service providers are doing to enable banks to comply with the SEPA instant mandate. So a really interesting one, but it'd be great if you could begin by telling us what the mandate is and what it entails.
Yep, absolutely. So a couple of months back, the European Parliament and Commission finally got their act together after many years of debate, which itself is quite ironic for a SEPA instant mandate, to sort of suggest that every bank in Europe should be connected to the SEPA instant system in order to make money move more smoothly across the European continent. They've put on a really interesting deadline, which was 9 months from the date of enactment of the legislation, which came into force in early April, means that by January the 9th, 2025, that's 2025, then all banks across the Eurozone have to be connected for receiving of instant payments and 3 months later for the ability to send them. So by April 2025 next year, every single bank in the Eurozone should be able to send and receive SEPA instant payments. They've also extended it a little bit further, so it includes some of those other organisations such as the payment initiation service providers, the e-money providers, and all of the banks outside of the Eurozone in the rest of the European Union, which means that within the next 50 months in total, we've got to get around about 4,000 institutions connected to that system. And in the next 9 months, around about 2,000 have got to be connected to the platform.
No small task then.
Absolutely not.
Well, thanks for setting the scene. And I know the Federal Reserve connected 400 banks to FedNow in the last 12 months, didn't they? So run us through that and tell us what's different then.
Yeah, so really the Federal Reserve did a great job. They got 400 banks connected in the first 12 months following the pilot. But that's 400 out of 9,000. So as you can see, it's a relatively small percentage of their market. And that's really because in banking, we see this sort of 20-80 split in the fact that around about 20% of the banks tend to do 80% of the volume. So if you look at most European markets, there's 3 or 4 major banks which will cover the vast majority of the market. Also, from a technology perspective, there's about 20% of the banks that are technologically advanced and adaptive enough to make sure that they can take on these sort of changes within the market within record times. So we're really seeing that there's been an emphasis on the market to sort of make that shift, and perhaps the technology is not there to facilitate that. In the past, we really would have relied on SaaS providers, so large market players who would provide a platform service that everybody could connect to very, very easily. But we've also got some interesting pieces of legislation in the shapes of DORA and obviously our old friend GDPR and the Schrems II enactment, which are really looking at those old outsourced arrangements and saying, does this necessarily work in a modern world? From the perspective of, can we still have commingled databases? Can we have lots of people reliant on the same iteration of the application? If that application goes down, suddenly we lose a large segment of the market and the inability to pass those payments through, which again is contrary to what a lot of the legislation is doing. So we're really to say, probably it's not going to be with those traditional SaaS providers.
So as you say, SaaS is not necessarily the answer, but if it isn't, how will the majority of banks then make it on time?
Very interesting question. And we ourselves have been talking about what we've called adaptive banking for a long time, which is where we've been helping banks to sort of upgrade and change their infrastructure so it becomes more adaptive. They're able to manage change and go through these different periods of regulation more easily. Now, obviously, if you've not done that today, 9 months is still a really difficult time to refresh everything. But in the same time that we've been guiding our clients through that, obviously, we've been not just talking the talk, but walking the walk ourselves. So we've been amending the way that we do things in market. Now, CGI has a number of SaaS solutions that we've looked at in the past, but what we're starting to move towards, and we've done a lot of the work towards getting, is more individual tailored services that solve the problems that SaaS used to solve, but also put you in the right frame for DORA and GDPR compliance. So these are based on cloud technologies where you can have individual environments for every single bank. lots of iterations of the same application, lots of databases, so there's no need for commingling. You can use a lot of APIs, you can use a lot of AI tooling to make things really, really very fresh and relevant. It really is sort of SaaS for the DORA compliant era.
And to end on the million-dollar question, as it were, do you think everyone will realistically onboard in time?
Realistically, I would have to say no. And that's because historically, if we look back at the SEPA mandates back in 2008, 2009, around credit transfer and direct debit, we saw there was a very long tail. So there were many people that could connect really, really easily at the beginning, but they find it more and more difficult. As a service provider, the market say, yes, absolutely, we can onboard absolutely everybody, it's not a problem. But I think the reality is that we're going to see some shifts in that deadline. The vast majority will probably make it by the send deadline, so April 2025. I think we'll see a lot of providers creating services using things such as our own payments as a service ability to get onto that market. But I think they're going to have to look very, very closely at this and perhaps push some of the components into the further deadlines that are aligned to the e-money providers, payment initiation providers, and those outside of the Eurozone. But it's going to be an interesting ride. And if you're viewing this ahead of EBAday, I'd say if you've not picked a vendor by the time you get to EBAday, your first port of call before you come to Lisbon is to make sure that you've told your CFO and your Chief Risk Officer, because there's going to be some fines coming your way for certain if you don't manage to get your vendor on board before that, because you're not going to make the deadlines. So it's going to be an interesting conversation, and I'm looking forward to a very busy EBAday because like all of the vendors that are there, we're trying to provide services to make sure that banks can be compliant, but it's just definitely going to be a race to the finish.
We're really looking forward to seeing you at EBAday, and thank you so much for sharing your foresight on the SEPA instant mandate. Certainly one to watch, and some good advice weaved in there as well, Ainsley. So thank you, as always.
Thank you.